by far the most important thing is for people is to realize that the ball's still rolling. Like we're trying to build a better price for December 25 corn right now. And like you're always moving, and if you don't have a guy like that, you need to find a different guy.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prishmann.
Well, John, I suggested that we should do the politics episode today since it is Primary Tuesday, and you said sure we could bring everyone together, we could create unity, but you didn't want to do it?
That idea was shot down instantly. That was the worst idea that I've heard in a while for a podcast. There's 1,000 that you can listen to every day on that.
That kind of hurts my feelings. I really thought we had the answer for everyone to join together in unity. And
yeah, it's getting better out there, that's for sure. No, it's so boring that it's hard for me to even talk about. For me personally, I find it below me. I do. I just it's WWF. I don't know who the good and bad guys are today, but I'm sure there's a major problem that's upsetting people and probably some sort of clip on Twitter. But yeah, it's exhausting following all this. I don't know. One would call maybe a waste of time.
It's just not part of your journey at this point.
No, my big hope was as people got older and they saw more and they've seen the dog and pony tricks and all the sleight of hands that you would get wiser in your older years. But that does not really happen. People just get older and angrier and they don't seem to learn from what they've seen in the past, and I don't know. It's really exhausting. Unfortunately, it affects commodities quite a bit, and lately it has been. But I think the more interesting story is the Middle East and the lack of direction there, and the effect that it's having on oil, and just there's no clear answer, and nobody's really actually talking about it much.
I do think it's interesting with all the tension. I just see headlines constantly on the Middle East, and there's no conversation that I see about it or what's happening, or is there anything?
Yeah, it's not normal for it to be this quiet, and you see escalation on both sides. And in an important commodity area, obviously for oil, and oil seems to have grown tired of it, and it was selling off. Now lately it's been going higher, and it has paid attention to it, and it wouldn't take much more of the escalation to really make it go. But what's interesting is there's no official stance. In the politics, there's not official stance on much of anything or any transparency, which makes a very unpredictable commodity environment. And that's where we are right now. But yeah, like you say, you hardly see it talked about even.
Yeah, it has been an interesting period as far as news goes in general for the last couple of weeks. Let's shift gears completely though to areas other people want to talk about the super exciting news that beans now have a $9 handle in front of them. What are you looking at on beans? We've talked endlessly that there hasn't been much support there. The numbers have been bad. They should have hedged. There's opportunities. You mentioned we're using it. You'll hear it on the intro. If you listen to the intro, you heard it. There's things to do. There's action. What are you doing?
Well, beans have now fallen so fast and so far, and they didn't get any good news in the last report, and most likely the next report is not going to be any better. And all the way into January, there's guys hopeful that that's the highest yield print that we saw. But it's a demand problem in soybeans, and that's not something that goes away really fast. But it's important to look at the markets and ask, is there anything that I should be doing? Is there anything I can do? And I am getting a lot of phone calls on that. You get to a market like beans that's moved a little fast. to the downside, and there gets to be less opportunity where corn hasn't moved down a lot. It has, back and forth a little bit. Yesterday it was up, today is down. But corn hasn't made a major move other than off the summer highs or spring highs. I'm seeing an opportunity there, and it's important to keep on moving and look for hedges. I'm already working on December 25 to try to build a $5 price for guys. If it's going to be possible, we're looking at a lot of different things. And like your old high school football coach said, just keep the legs moving, keep the knees moving. Guys give up, and I've talked about this a number of times. They just give up, and they just, I don't know what to do. It's over, and they just walk away from it. And actually, you'll find this time of year, there's usually pretty good opportunities in grains. It really depends on the year. It depends on how fast it's going down. It depends on the reports. But as we move forward, they got the bar set very high for corn demand now. One guy's going to see that as a positive, and it is, but then it's very negative it's hard to go higher than that bar. So when you have these USDA reports, it's very hard to get above what they've already said. They got this high level of demand, and it's hard to surprise the market at that point. So we had our acres cut, 700,000. Then we had the yield raise, and then it kind of offset each other with the higher demand. So it looks like on the face value, this could be the bottom of corn, but I would keep my eye on the harvest and where are we going to put all this stuff and the logistics problem that's going to come. I don't think we've ever seen anything like what we have in corn, especially where we have this much carried over, this much on farm at this time of year. And the funds have covered 100,000 shorts. That was the big bull's cry, is that everybody's short. But on the way down, they've covered 100,000 of those shorts. The September-December carries widened out to 19.5 cents a day, which I've never seen before. Warning signs everywhere still out there that this is not going to be okay for a couple months until this corn gets put away. So I'm working on corn stuff right now because it sure looks like he should be. Again, we can't give recommendations. You'd have to call me and I'll tell you exactly what we're looking at, what you can do, what we're looking at for December 25. You always want to keep looking and keep going until it gets to the market where it's going sideways, not going lower, not going higher. And then at that point, there can be no opportunity to market where the play is to do nothing. I don't think that is the case for corn right now. It's getting there to be there for beans. Even if ultimately we're going down 60, 70 more cents, it's still going to be harder fought money, a lot more risk than reward on a lot of stuff, where corn doesn't feel that way at all. Corn, and I know guys don't want to hear that, but I mean, there's warning signs that this is a penny and a half carry in one day, adding to already a substantial carry, and the funds covering 100,000 contracts too, and carry widening out. These are all very big warning signs. But the market is the market. I mean, it's due for a bounce. Everyone's expecting one. They've been expecting one for a while. That usually keeps guys out of markets is what happens. And there's in my opinion, there's still plenty to look at. There's things I'm involved in personally. There's things I'm suggesting hedgers get involved in. And if your guy isn't doing that, you want to be looking for guys that do have those ideas. This let's just wait for the bottom and buy mentality is horrible. You're already long in the field. Well, you want to be looking for answers, even in the midst of all the chaos. You want to continue to move forward. And for corn, I think there's a lot of opportunity or some opportunity. Beans is tricky. If you're lucky, the problem is where to take off the hedges, which I definitely deal with that every day in beans now, because it gets to be a lot of money every day, and it gets to be hard to know where to get out of your hedge. And that's something that's not often talked about, is where to exit your hedge. That there is no good guidebook for that. I think you were talking about what kind of numbers you're looking for. What chart are you looking for? For me, I'm just looking for order flow and a different pattern. Look for the buyers to step in, and that doesn't happen in just one day. Just look for a different pattern than we've seen. And right now, it's almost too easy. If I short a bean, I could stop it right now if you wanted me to. I would go straight up if I shorted a bean. But if you watch it, it goes down every day, and that's how that works in an easy market. I tend to like to fight for $300 for several weeks and have a lot of stress and anxiety over that. where you just jump on a short and gain $3,000 in a couple. I don't like those. Those are no fun.
Those are too easy.
Yeah, you sleep right? you sleep too good at night. That's just not what fun is that. No, so the beans is going to be a tougher market. Although ultimately it looks like it's going lower. How do you handle that?
Well, let me interrupt for a second though. Like, I mean, my question on beans right now for people that are watching this bean market, what specifically are you looking for a bottom? I know you're not a chart guy. You're not looking for some. Well, I mean, you might look at some of those, but
yeah, seasonals for sure. There's it's not even a saying really that beans don't like to spend a lot of time in the 10s, and this is true. I mean, we just saw that happen again. So now we're in the 9s. That's where it does like to spend a lot of time. When it gets extreme, you'll get into the 8s. So with what we have going on right now, 890 is it would be an area where it would be extremely oversold, and it would break $9, and it would spook a lot of people. But it's hard to put on a low this time of year, like a number on a low. Generally, it comes after one of the reports this time of year, like the August or September. We just had that. So we're day 2 after the report, and beans show no signs of stopping. So you want to go with seasonals first. That's what you want to look at. Now, the October 1st, you want to be short beans. So I would expect the low to come in by October 1st. Now, sometimes that low gets taken out, but that's the time frame I'm certainly looking for. You'd be looking for frost, scenarios where that could be in the forecast. Even if it doesn't happen, just being in the forecast will bottom it. You just want to use what I like to call common sense. You're just using logic and common sense to try to find a bottom. The funds are obviously terribly short, so there's not a lot of fuel for the fire. But a market, the reason why I like the downside in commodities, it doesn't need any story to keep falling. The funds can be short, and it just falls naturally. That's what commodities do. That's why the downside is much easier to make money on the downside than the upside in every commodity, because you don't need any story. You don't need anybody selling. Just if you don't have enough bidders at that price, it'll naturally fall down to find that price. So that's why the downside is much easier than the upside. So you're just looking for the offers to slow down. That's where back to the tape. You're looking for everything to lighten up, and there's just zero signs of any of that right now. For beans, though, it's an interesting market because it can change overnight. Where corn is a bigger bust to turn around, beans, just one piece of news can change things and attitudes. So you're looking for anything like that. But for me, it would be seasonals, and everything says, down, but it tends to be back and forth seasonal this time for beans. Where you want to really worry about is the back half of September when they start bringing it in. And that's what I'm worried about for all the grains. And I think we talked about that a little bit, is what are they going to do with all this when the commercial channel is already seemingly full? That's a rare deal.
On that, I mean, that kind of answered the question on beans. I think it's important. I was just going to note that could be whether you're getting out of the hedge, you're looking for a bottom, or it could be you want to try and take advantage of getting some upside if they're going to go up. Either way, you're looking for those things. You're watching the tape. You're watching for offers. You're watching for frost. Those things.
Yeah, and I'll entertain the cheap call stuff later on for sure. And I talked to a few guys about that. I do like cheap options, including calls, and things tend to change. This is not the time of year I'm going to be looking for that, but I will look at that side. Things eventually will bottom. I mean, the biggest enemy for a grain marketer on both sides is going to be a market that just goes to sleep. Goes to a low price and goes to sleep. No volatility, no option stuff. I'll move on to different markets, so I don't worry about that. But from the hedging perspective, that's your biggest enemy, is that there is going to be massive carry, but there isn't anything. Once it goes to full carry, the bear spreads don't work, and you certainly don't want a bull spread. And then you have no premium to sell, because these are prices that aren't even very good for very little premium. So that's the biggest enemy that you would look for if you're a grain marketer or hedger, is no volatility and a dead price. But that's the way it was when it was when I first started, 1998 maybe, all the way through 2002. You would trade corn all the time. You were just looking for $200 gain on maybe a 2-week long trade. But I was happy doing that. I don't remember being upset at my little sugar gains or little cattle. Nothing moved around a whole lot. So life goes on. I mean, I'm not too worried about that. But as far as profitable opportunities for hedging, that's where it gets to be really tough, and you have to be creative. And I'm hoping that we will have these opportunities even at the bottom. And things do change. I mean, we could have early frost. I mean, it could change in 2 weeks from now.
Well, and going to that hedging side, you mentioned you're doing some stuff, looking at some ideas for December 25 on corn. Just because you would hedge today or this month or in the next couple of weeks, that doesn't mean you have to hold that hedge till December 25. Right?
Yeah, that's another big mistake people make, is buying like a put and walking away from it. And it's highly profitable right now if you bought anything. I mean, you can buy anything and it's profitable even from 2 weeks ago. And then just feeling like you need to keep in the entire time because I bought a November put, I got to stay until the third week in October. Big mistake people make is holding it the entire time period. Generally, you're going to find your highs and your equity on those options, any time in between the beginning and the end. Usually it's somewhere right in the middle. I like to buy a lot of time. I'm not a short-term option guy, or I buy more short-term options. But yeah, again, that's a struggle that a lot of people don't talk about, is where to take off the hedge. And I deal with that a lot. And there is really no good answer. I mean, it's a feeling. Like we were just talking about, how do you find the bottom here? It's just you're looking for signs. In options, it can be really tricky because the change in attitude, all of a sudden they drain all that equity that you had in that premium, and it's just gone on an attitude change, because a lot of these options that we bought aren't anywhere near the money still on some of the cheaper ones. And then what do you do with that? Well, it's the idea that it could go there, not that it's going there. And then once that idea is gone, then boom, all that premium's gone. And I saw that with some of the earlier options we had. That one summer heat wave there just a couple weeks ago, some of those options, I think $10 puts were 23 cents and instantly went to it was 21.5 cents. And then it went right to 10 3/4. And it looked like it was going to get a lot cheaper than that. And now those options are closing in probably on 40 by now or more, of course. So it can be really wild in the options. I don't know. You just take it day by day there. That's my advice to guys, is just try to come up with a plan. And even if you're not watching it, just have an exit or a price that you might want that makes sense to you. There is no good way to do it. I'm terrible at it. That's my weakness. I'll get you to good stuff, but then leading you to the biggest amount of profits in that window, I'm not good at that. But the good news is most of my clients, a lot of them have different philosophies and a lot of them do different things, and they tend to do better than I do, a lot better, which I'm happy with. But I'll get you there. I'll lead you to the water there. But you gotta figure out how to do the rest yourself, because that is one of the hardest parts of trading.
Well, and that one of the things that I hear is, I'd like to hedge, but I don't like hedging at $5 corn or whatever that number might be. And it's like, okay, but we should hedge something, and you can always adjust your hedge.
I think that it's probably that's a beginner's way of thinking about hedging, and that's where a majority of people are. And I think that they get mixed up with, I need to hedge profitable prices, and if I can't, then I do nothing. There's a lot of in-betweens there. I meant, a perfect example, $5 puts, I keep going back that in March, were 34 cents. You're not locking that price in. You're locking in $4.65 technically. That's the worst you do, for the $5 minus the 35 cents you paid for it. But if it goes to $6, you get that too. You know what I mean? Or $7. So there's gray areas, and I think that guys use that as an excuse not to do anything, because it's easier to do that. And they're not very creative, because plenty of guys will use good common sense to manufacture a better price. Whether it be inversions in spreads, whether it be selling premium against stored bushels. There's ways to create more without taking additional risk. Again, it's more one-on-one basis, and I'd have to talk to a guy. But there's guys doing this all the time. That's how I know this. It never stops for some guys. They're always thinking ahead, and of course, they generally do much better, especially in bear years, than the other guys, because they're willing to take a price, build a better price, or at least look for ideas to build a better price. And it doesn't all happen here. Some of it happens at the elevator. Some of it happens with the elevator programs. Some of it happens storing it and selling calls against, stuff in store, or selling carry and selling calls against that. But, again, if you're not familiar with all of it, you're just going to say, well, if it's that hard and that risky, I just give up. You see a lot of that. And then you see some guys that want to farm and don't want anything to do with this. All of it's fine. I mean, if it works for you, but again, if it was me and running a large farm, I'd be very interested in hedging, because I'm lucky enough to see very successful programs versus, other guys that do it a little bit, or guys that do it none. I mean, both teams are rewarded in certain situations. Like you saw that in 2020. If you didn't hedge, boom, you got much better prices to the guys that did. So who wins in the battle over the long run? I'm going to guess the guys that are somewhere in the middle, who aren't rigid in their hedging, just looking for better ideas to lock in reasonable prices, yet have the upside open, and just the more flexible hedger, maybe shorting futures and then buying cheap calls to have these windows for the bank. There's a million shades of gray in there, and there's a plan that works for a lot of people. It's just the only thing that limits you is your imagination or getting ideas in front of you. And that's where I think a lot of guys don't do well, is they're just in front of the wrong people and they're not getting the right ideas, because you don't have to do every one of these ideas, but the more ideas coming your way to hopefully make your price better is better. And I see that happen all the time. I would subscribe to anybody that had good hedge ideas that put them out there, that were somewhat consistent. And again, one guy's going to be only option. One guy's going to be futures option, mix of everything. Everybody's different. That's why I'm not a big newsletter sort of guy. I think you just talk to a guy, plan stuff out, and try to execute it the best you can. And that's kind of what I do on a daily basis.
I think there's definitely we see it all the time, right? The vast majority of people end up shorting at the bottom, right?
Selling or marketing at the bottom. They finally market their crops at the bottom or lock it in at low prices. They're not necessarily giving them futures. They might be through the elevator, but it's just, they tend to, by the time they throw the towel in, it tends to be a bad price. And not only that, the worst part about it is it tends to be they get locked in there for a couple of years. So now the good hedging is going to be all about finding the turn in these markets, and that we're at the beginning of these bears right now. We're not quite there. We don't have this in the bin, but we're at the very beginning, which is not what a guy wants to hear. It tends to cycle, and this is the very beginning of it.
Yeah. I just think psychologically it's very normal for people to get stuck in that. Like, we see the bottom, we freak out, and we just go and sell or give up, to your point. And I think it's important for people to know, especially more time in the market, the more you've been involved in markets, the more time you've done this stuff, that you can still see plenty of opportunities to pursue. Like, you don't have to just pull the trigger. And in fact, it might be the worst thing to do is pull the trigger somewhere here. And that's the advice that you can provide. And like you said, it's a lot of one-on-one, because it really depends on your situation.
Yep. And what their margin account is, what they want to risk in the market. It depends on a lot of different things. A lot of different farms run things a lot different. Some of them are going to be knowing where their yield is fairly early, and they're very confident the rains are going to come. Other guys I have that need to do almost all of it here, because they have no idea what they're going to have for bushels. I mean, it's a very variable climate, and it can be no rain at all. And, and then you have all the insurance programs. You have everything. It's a mix of a lot of different things. So that's why I've never been a newsletter, one-size-fits-all sort of guy, because everything's very different for one client to the next. And you just try to get what fits the best for them, and after talking about it and coming up with a plan. And I think that's what works the best for people. I think people do make a big mistake with the idea that they're going to lose everything if they get involved. It's like there's lots of shades of gray, and there's lots of limited risk strategies. So two guys will call in a row. One guy will be a completely different strategy than the next guy because of their risk tolerances. But you still try to get the same idea or the same sort of deal going with them. Like, one guy's going to lock in corn. One guy will short December 25 futures and then start shorting calls out of the money against it with the idea of building a better price. The next guy is going to wait for a better price and then call the elevator and do a hedge to arrive, where he didn't do anything here. We just planned on waiting for this price and doing it there. So you want to learn how to use the tools that are available that best fits your risk parameters. But I think a huge mistake guys make is not talking to their banker, getting on the same page with them, and then all together making a plan for locking in a better price. And then that works really good. I've done that a lot of times. I do that to this day, where everybody's understanding what's going on. It seems to run really smooth. And as long as you're hedging, there shouldn't be any issues other than basis risk is all that you're going to get, risk out of here. Because the futures can differ widely from the cash market, but those trends don't tend to be much different from year to year. Obviously, there's good basis year and bad basis years, but that's the risk that you would have, the disconnect between futures and the cash market.
That brings up a topic I hadn't thought of for a while, but the reality is there have been farms lost over bad moves, but generally that is because they're too stubborn to get out of something they've put on, or scared to take a loss, or didn't work with their banker, didn't have a full plan in play.
Yeah, or they weren't hedging is more likely, or they're doubling up on a bad hedge, or they're over hedging. I personally haven't seen it or been through it. I don't know what it entails, but I would guess a lot of bad decisions in a row. You hear things like there was a feeder cattle one where one of the sons was in charge of the whole thing, and he just kept doubling up on the way up. Doubling up way beyond what they had for cattle, and then, eventually ran them out of money. You don't know. You hear the rumors, and generally, if you're hedging, let's say you're hedging 5,000 bushels of corn, and you short one corn contract. Theoretically, if it goes up, you're covered by your bushels that you have, so your margin call is just paid tick for tick, from the short futures price. Unless you have basis risk. So if you're hedged correctly, you should not run into that problem. But that being said, I think to what you were saying, that it's not communicating with the bank and the credit line running out is probably one of the biggest things, I would guess. And, that's why that relationship is really important. And I am not a professional on how to establish that relationship. But you're going to want to know that margin money is not going to run out and have that plan. So there's not a decision made in New York at the headquarters of that bank to cut this guy's credit line off when the guy you're talking to told you it was okay. And then somebody above him says, no, you're done. I think that does happen. And that's something that you need to have these conversations before the banker. Now, if you need to be short futures and they need an absolute, what can I lose on this hedge? Maybe you have to give up some of the bottom line and buy a call and say, hey, now we established a black and white. I can't lose any more after $6 on this hedge. And you can have exact numbers for the bank because they do like that, of course. They don't like this gray area that we're talking about. So you can get exact numbers. It's just getting knowledgeable people on your team. That's what you're looking to do to hopefully help you through this. But the banker hedging relationship is very important. I've really watched some develop over the years. I've seen some go bad, and everyone that's gone bad, if it was a good operation, they moved on to better bankers, and it's been almost seamless, and it's really changed the way they've hedged, and they've done a lot better. So if you have a bad relationship, you really want to change that. That's a huge part of hedging.
I talk about that all the time in my other businesses too, is that that banker relationship, and every bank is different. So
it is, no matter what they tell you. There's very different bankers and very different attitudes, and it's just like shopping. There's so many choices out there. You just want to establish that, like you say, in your business. It's not just this business. I would guess this is exceedingly important in high inventory businesses or anything where the money needs to keep flowing, because it shuts off, and then that's where disaster strikes and ruins a business, and it can ruin a farm.
Yep. And even not shutting off, you can have too much available and get yourself in trouble too. And it's helpful to have banker who understands your business, if that's farming, if that's
Yeah.
whatever,
Yep.
that says, we're here. We need to look at managing managing your risk. Maybe you need that call in place. Maybe you need, whatever it is.
You can plan it very well to where it is pretty much in commodities to where it is. Of course, something can happen that's never happened before, but more or less you have, everything that you can possibly covered. Like I say, even buying cheap calls in front of a summer before hedging, which we haven't talked about it, but the courage calls are, it's going to be the season for courage calls here pretty soon, where you're buying it when nobody wants this stuff and they're giving away these calls. All of a sudden something happens that we're at 510. What do I do? The guys that have the courage calls on, they're going to know exactly what to do. So back to what we were first talking about, it never stops in good grain marketing. Keep the ideas flowing. I talked to 3 guys about courage calls today. I have no interest in owning any of them or suggesting guys do. And it's definitely not a recommendation, but it's something guys forget about, to where like decisions that you make now, you might not know it, might really help your marketings further on down the line. And it's funny that you mentioned that. I've had a few guys talk about that here recently. But if you're overwhelmed and you don't even know where to start, or if you're kind of half in, half out and you want to get going more, just talk to your banker, talk to guys like us, and then learn more. And it's a process. You don't have to dive right in. Just continue to learn, and that's not going to hurt you.
And I would say that might be a great spot on beans now, because we don't want to make a move for a while. Start asking questions, start shopping around. There will be moves soon.
Just like the movie War Games. I like that movie a long time ago. Matthew Broderick. And the machine had to learn sometimes the best move is no move at all. And the beans are there now. I mean, I do think that it's going lower. I don't know that, but I mean, it appears that it is. But still, the risk is going to outweigh the reward, which I think. But I'm pretty conservative when that comes to that stuff. Other guys, just keep on diving right in. And, it's working really well for them. I'm not brave enough to do that. But there'll come a time where that won't work anymore. I see more risk than reward in beans short term. But corn, I think guys are sleeping on that, kind of hoping this is the bottom. And it could be. But I mean, we have a large harvest in front of us, and where we're going to put it all.
I usually like to give you a heads up before I ask you hard questions, but I have one hard question for you here, and then we can maybe wrap it up. Any thoughts on the dollar? And I ask that having not looked at the dollar at all, but I know that it's been a topic of conversation, and I know it affects grains. So have you been watching the dollar at all? Where are we at? I know there was a lot of talk last week about the yen and dollar.
Yeah, oil and the dollar. If your guy says inflation is here and it's going to bring grain prices up, oil and the dollar is where you want to watch. You obviously a falling dollar and oil going up is a pretty powerful combination, and you have had that, just not to the degree that we need it to happen for better exports. Back to the politics. One side talks about getting the dollar lower, and getting exports up there. It's more of a function of the interest rate in the world. You need U.S. dollars if you want U.S. interest rates. So if you have, yen and you want to convert it to U.S. dollars for the U.S. interest rate, you have to make that conversion. That's where the dollar's really been shining lately. Is we've had a great interest rate, and that's what's made the dollar go higher. So in the coming year, the gold bugs and the silver guys will say that the collapse is near. You're always watching for signs that it's going to weaken up. When oil hit 150, I believe the dollar index was 89. We're at, 102? I haven't looked at it today either. We're at 102. We're nowhere near 89. But it is something you need to watch on a daily basis. And it does tie in a great deal of the commodities. But with our interest rates the way they are, I don't think it's going to fall out of bed. But, crazier things have happened.
Yeah, just another thing to keep an eye on, and I think it's important to be
super
aware
important. Oil and the dollar. If you're looking for a grain rally, that's where it could start. A falling dollar and oil appreciating. So that's something you're always watching if you're a grain trader.
Makes sense. Well, anything else to add today, John?
No, it's a beautiful summer day. I like these temperatures, and I think people are getting ready for school. From what I understand, some schools already started. And sports have started in Fergus, and away we go with that.
Yeah, it feels fall-like, even though it's mid-August.
I wish it was fall. I'm so tired of mowing that lawn. All I do is mow lawn. I say that every day when I come into work, and I mean it. All I do is mow lawn.
I'm ready for some fall fishing is what I'm ready for, because August fishing, I'm over it.
Yeah, and you know what? I hope we have a nice September for everybody, but I hope it's not as warm as last one. You remember this time, almost a year ago today, the air conditioner went out here in the office, and I thought, hey, we'll just glide. That was maybe even later than this, late August. We'll just glide into September. It'll cool off, and no one's going to notice. Oh, it was hot in here, and we had a lot of fans going. So I look forward to just a regular fall. But it is. There's some chill in the air. I definitely, when I come to work, I have the heat on, and I'm not a cold guy, and I have the heat on. And then when I just hopped in for lunch, the truck, and it's full blast air conditioning. So you're seeing some pretty wide range of temperatures here right now.
Yeah, we're well, like I said, I'm ready for some fall, and I hope we get a real fall fishing season.
I do too. That would be fun.
We'll see what happens. Well, leave your number, John, and we'll wrap up for today.
218-731-1578.
Thanks, John.
Yep. Yeah, I mean, you have to keep on moving and looking for a better price.